Hi there, my name is Eric Soltis. I'm one of the attorneys here at PSCB Law. Today I want to talk to you about the Consumer Financial Protection Bureau, mortgage servicers, and the forbearance options that you're supposed to be able to have. So three things to unpack there. What's a CFPB, what's a mortgage servicer, and what's a forbearance? So the Consumer Financial Protection Bureau was set up after the 2008 crisis in response to the predatory lending tactics that drove the subprime mortgage and subsequent foreclosure crisis. Yeah, that's really exciting, isn't it? But really, it's a watchdog agency that's out there to protect people who borrow money to buy a house. So they're still around. They're still doing their jobs. Under Trump, they were weakened, but under Biden, they're getting in a few, like their teeth are coming back, where they're actually out there now looking at the policies and practices of mortgage servicers related to the forbearance options. So a mortgage servicer are the companies or the actual banks that process mortgage payments. You may borrow money from one bank and then suddenly you're having to pay somebody else. They could have either sold your loan to someone else, or the bank could be hiring a servicer to actually take care of the loan. A lot of loan servicers got in trouble back in the financial crisis by the CFPB when they found all these crazy tactics that they were taking to basically hurt borrowers. That hasn't gone away. There are still issues today. Like, I personally know people that their mortgage loan servicers are not helping them. They're not offering the mortgage forbearance, even though they have Fannie Mae and Freddie Mac loans that are backed by them. So the forbearance period is supposed to be a time period under the CARES Act where people don't have to pay their loans for a certain time. It was originally, like most people, are getting 30 to 90 days. It could be extended up to 12 months or even 18 months, depending on when people got their forbearance. So some people aren't being offered the forbearance at all. This is where the whole thing, where the CFPB is coming in investigating. So the mortgage servicers who are violating the CFPB's guidance, they could be facing stiff penalties for them, and if they found out that they were actually hurting borrowers. The CFPB is also researching what exactly is happening in the marketplace. Reuters basically did a really good story on this. I'm going to put the link below in the description, so you can go there and get a lot more details what's going on. So the CFPB is investigating a few of the mortgage servicers out there and how they're handling requests. I know people where the forbearances are being cut short. They're only being offered 60 to 90 days of forbearance. The people working for the mortgage services are playing hardball with them, not offering them what they're supposed to be allowed to get. I even have one person where instead of offering a forbearance, they said, "Oh, you're unemployed. We'll put you in an unemployment program, and you can pay us partially for the next 6 months. And at the end of the 6 months, we're going to have this big lump sum balloon payment that you need to come up with." The thing is, if somebody couldn't pay their forbearance program for 6 months and can only pay a partial amount, I don't know what they're thinking they're going to happen at the end of the 6 months where suddenly this balloon payment comes due. So that's another thing. Different agencies, different mortgage servicers are handling the whole forbearance process differently. So some agencies are going to be working with people, so at the end of it, there's going to be easy debt relief solutions. Hopefully, the federal government comes up with a program like they did with HAMP and HARP back after the 2008 crisis, which allowed people to modify their mortgages. At this point, there's over 2.3 million people are in the forbearance program right now. So these are people not making their payments, but are eventually going to have to come due and modify their mortgage some way to basically move forward. Right now, there's one other source I saw said up to 10 million people are facing possible foreclosure or eviction at this point. So this could become a national crisis of homelessness. I even saw an article where Texas is moving forward with evictions and ignoring the federal mandate by the CDC to avoid evicting people in the middle of this pandemic. So anyway, let's get back to the CFPB. Right now, according to the Reuters article, the CFPB is examining how many and which borrowers are in forbearance, whether loan modifications will succeed in getting borrowers repaying again, whether servicers have been obstructing or delaying forbearance requests or only granting partial relief. Even in some cases, if servicers have been discriminating against borrowers based on race or ethnicity, whether deliberately or inadvertently. Like my partner, even like when all this started, he was offered 90 days, and which point it didn't make sense to him because at the end of the 90 days he wanted a balloon payment. Not the best way to go into like trying to help somebody. Hi, don't pay us for 3 months, and at the end of it, come up with all 3 months of payments in one shot. So if you feel like you've been discriminated against, or your mortgage servicer is not helping the way they should be, please reach out to our firm. We can go over what your options are. You're not alone. My firm basically, we were founded in the middle of the last like financial crisis to help people get loan modifications and to basically like save their houses from foreclosure. So once again, this is just, it looks like a repeat of the last time. There are more people now facing eviction or foreclosure and eviction than there were at the last crisis. So if you have any questions or you feel like you need help, reach out to us. We don't charge for consultations because we know you're in a tough spot and we want you to go over all your options and be informed. Thank you.